Inner Circle Trading, or ICT, is a wildly popular trading methodology. I bet you've heard of ICT. If you haven't, give it a quick Google. Basically, ICT is a trading strategy based solely on price action. No indicators are required. All you need is a pricing chart to trade. Now, a primary concept of ICT is the order block. An order block is a special market condition that occurs when institutional traders execute large orders. It's visible on all the price charts and is a valuable tool for crafting trading decisions. Breaker blocks are just as powerful as order blocks. In this video, we'll tell you what a breaker block is and how to trade it in the live market.
A breaker block is a failed order block. Take a look at the diagram. Here we have an order block that suggests a bullish market structure. It is a bullish order block. As you can see, price continues to rise above the order block, but on a retest of the order block, it fails to support price action. The order block has failed. Now, it's a breaker block. Okay, here's the key concept to remember. When an order block fails, traders and market makers pile into the market and push prices in the opposite direction. This is known as a liquidity grab. Now that's why breaker blocks are so important. They tell us that the bullish or bearish pressure created by smart money traders is now over. They tell us that a new phase of market structure has begun. Once a breaker block forms, it is identified as an area of support or resistance. A failed bullish order block becomes a bearish breaker block. A bearish breaker block serves as resistance. It is a signal to sell the market. On the other hand, a failed bearish order block becomes a bullish breaker block. A bullish breaker block serves as support. It is a signal to buy the market. The process for trading breaker blocks is simple. Number 1, identify a market structure shift. Number 2, identify the breaker block. It is the failed order block located where the structure shift occurred. Number 3, wait for price to retest the breaker block. Number 4, establish confirmation. Now, confirmation may be a simple positive or negative candle or the combination of another indicator. The choice is yours. All right, it's time to trade some breaker blocks. All right, let's look at how to execute a trade using a bearish breaker block. Now, this is a 30-minute Euro USD chart. We've got our market replay function here on TradingView, and we're going to go ahead and roll price action. Now, you'll notice a couple of things. Number 1, we had a nice big sell-off and a rally. We sort of have a bullish market state. You'll notice how price action's flattened out. As we move forward in time, we can see where those bidders have stepped in repeatedly and formed our bullish order block. Now, what we're looking for here is for market structure to either continue up, or if in fact this bullish order block fails, it becomes our breaker block. Well, let's just roll price forward in time, and you can see right here, we failed. This bullish order block now became what? It became our bearish breaker block. Now that's absolutely huge, because instead of support and being potentially a long side entry, now it is resistance, and it's going to give us a short side entry. So our bearish breaker block is going to act as resistance, and it's a signal to sell the market. Let's move forward in time yet again. Now right here, you'll see there's our retest. Now we hit our bearish breaker block. There's a couple of ways to design the trade. There's several different ways that you can do this, either fixed risk versus rewards, or you can base your trade idea on market structure itself. For me, I think that not a bad way to execute this trade is to put your stop loss up above this swing high, up above the top of this bullish market structure, and then right here you could be looking at putting your profit target potentially down at the bottom of this sell-off, or really the bottom of this somewhat bearish market structure. So we're looking right now, we've got a negative candle closed beneath our bearish breaker block. Let's go ahead and sell the market. So we're officially short, and let's roll this trade forward in time, and you can see exactly how this is going to unfold. Remember, that bearish breaker block, that's our resistance. We had a real nice trade right here. Nice stop loss up above the bullish market structure. As soon as we broke through our bullish order block, it became our bearish breaker block, and we shifted from a bullish mindset to a bearish mindset. All we had to do was get our entry. That was a pretty darn good trade to the short side. All right, let's take a look at how to really execute a bullish breaker block trade, and maybe look at how to buy the market using this strategy. Okay, let's take a look at how to trade the bullish breaker block strategy. We have a Great Britain Pound USD 30-minute chart. Let's go ahead and roll our market replay function on TradingView, and there is a nice big bearish break. I've sort of spotted where the order block is ahead of time. Now let's go ahead and push play again, and there you'll see your order block setting up nicely. That's where those liquidity providers stepped in and sold the market. They preserved your bearish market structure. Okay, let's go ahead and slow this down a little bit and take it step by step from here on in. As you can see, we're rolling forward in time. Our bearish order block block is supposed to function as a resistance level. Well, what's happened? Well, you're starting to see that liquidity grab develop right above that bearish order block. What's happened? It's become a bullish breaker block. Now, it doesn't necessarily mean, theoretically it was a short side entry, but now we've got a bullish breaker block, a very strong top side entry. We've shifted from being bearish to bullish because our market structure changed. There's your liquidity grab right above your order block, and now the market is moving higher. So on a retest of this bullish breaker block, we're going to be looking to get long if in fact we can. So right here you can see price is sort of above, and we're looking to really get a test in. Can we get a test in? Right there, not bad. There's your test. Let's go ahead and buy the market. Now, in real time, you're going to have a little bit more time than this to make these decisions. This is a 30-minute chart. You'll notice we've got the doji setting up, confirmation. We bounced off of our bullish breaker block, and now we're officially long. But in our minds, our trade's not complete. We've got our entry. Where's our profit target and where's our stop loss? Well, there's a couple different ways you can do this. Conventional wisdom said you'd be looking to the top of this bullish market structure right up here somewhere around the swing high as a potential target. Your stop loss could be extremely tight. You could go right there beneath this pullback off the failure of the bearish order block, or you could go right up beneath the breaker block itself. It really is your protocol and how you want to execute these trades. Somewhere probably in between with a positive risk versus reward ratio is going to be the ticket. And as you can see, when we roll forward in time, price keeps moving and moving and moving until we finally get that nice big bullish break. Our breaker block worked like a charm, a nice support zone. What once was resistance became support. We had an opportunity to get long and cash in on a bullish breaker block trade. So that's how you go long using bullish breaker blocks. Bearish breaker blocks work to the short, bullish to the long. It's really as simple as that.
Breaker blocks are powerful tools for active traders. They signal that a liquidity grab has taken place and that a change in market structure has occurred. What does that mean to us? It means more trade setups. We can trade breaker blocks on any market and on any time frame. Really, the opportunities are endless. Now, of course, breaker blocks are best traded within the context of a comprehensive trading plan. The use of prudent risk management, somewhere between 1% to 3% of your account balance per trade, is advised. All right, that's all for now. Leave any questions and comments below, and we'll catch you on the next one.